Hey guys, welcome back to Bite the Book. Today we're going to go through January 7th and the 8th. We're just going to look at some structure, some key points where some trades could have been taken on the 1 hour, 4 hour, 30 minute, 15, and the 5 if we have some time. So I already have all my stuff plotted out, so we're just going to go through this really quickly. We're going to mainly look at, again, the structure and then also the market open on when those trades could have been taken. So if we start on February 7th, what you'll notice is that we have a structure point around 32.50, right? Little head and shoulders action, head up here, and then what happens? 8 a.m. price pushes down by market open. So this is a 9:30 candle right here, aka the 10 o'clock candle. Price pushes up and then continues down. I think on the 30 minute it looks a lot more clear. So this is January 7th. So that's fine. January 7th. Alright, here we are. Perfect. So January 7th, on the smaller time frame it looks a lot better. Let me just remove some of these lines so it's a little bit more clear. Okay. So I'm just going to move that for a second. So look, market open actually 9:30. What happens is price pushes down $5, $7.75 actually. So easily sales could have been taken, especially after seeing this bearish momentum and just the structure breaking. Again, if you weren't too happy about that, you could have waited until price came back up. You could have waited about 2 hours for price to come back up, right? So support becomes resistance, and then price pushed all the way down. For January 7th, I think that would have been the only trade you could have taken. If you look at the hourly, for January 7th, you notice that it has the bendy candle right here. So push, got the close below the last low, bent up, and then push down again, and then it bent up for another push down. So depending on the type of trader you are, you probably could have held that, right? Had your $5 stop, and then have a take profit around $33, which is closer to 132 ticks. On any contract size, that's a decent amount of money in a few hours. Let's look at the 15 minute on January 7th, and then we'll make our way to January 8th. Okay. So now January 8th, here we are. So pre-market January 8th, we had a massive bounce to the upside, right? If we look on the hourly, what we'll see is, sorry about that guys, if we look on the hourly, what we'll see is massive momentum to the upside, right? After the 7th, price came up, stalled a bit, and then pushed up again. And then over here in this area is where price bunched up. And I guess it looks like buys were just accumulating, right? Because like imagine you get a twin bar up here, right? This is not a significant area for price to actually reverse that. So I would expect it to continue going up. With my bias of buying, I'll wait for some sort of signal, or at least the open to show me like which way it's going. I wouldn't really care much about what's to my left over here, since have we been higher? No, we haven't been higher. Well, still, I wouldn't really care. I still wouldn't care. So let's go deeper into the 30-minute time frame, and then we can take a look at the structure that built over there. So January 8th, right here, right? It looks like a little consolidation. We'll take a little pre-market stuff over here. So little consolidation. We had one close above once the 9:30 candle opened. A pull down back to the last low, and then it pushed up and continued going. So again, depending on the type of trader you are, you could have easily just taken it back up top to here, right? You didn't have to get the whole entire move. I know a lot of the time people say, yeah, they left money on the table, but like, how are you supposed to know where it's supposed to end up, right? Like, maybe this would have been the next best spot, since, you know, in fact, it was the last high over here. But other than that, like, you wouldn't know that it's going all the way up here, right? And that's why it's always good to take partials, especially if you open up a big position. Me, on the other hand, I think at this time I was opening up 1 contracts, so I couldn't really take a partial. For this trade though, I think there were 2 opportunities, or 3, to actually take a trade. So you had your one at open over here, right? You had another one on the pull down, because look, it's $5 easy, right? 250 stop loss, $3 stop loss, and you're good. So you had your one right here, one on the pull down, and then another one after we closed up here, right? Because price pulled back down again for a last kiss, and then it pushed up. And again, you could have made an easy, you know, $16 move on this just from holding it. Again, you probably could have played this area too, since it was stalling. I think on the 15-minute it shows a lot more clear, but let's just see how high it went. Like, let's see, imagine we bought over here, right? Price came down 325. I probably would have got stopped out, but price continued going up. Even if you bought after this bullish candle, you would have been perfectly fine. Price came up $8. Another buy opportunity would have been over here, but by this time it's 3:30, and usually around 3:30 there is a big push, but I feel like it's harder to predict. But by this time, you know that price is going up just based on, you know, where it is, right? We made a new high, we closed above it, we pushed down to grab some more buys, right? Stop some people out, and then again pushed up. Let's look at the 15-minute for January 8th. So January 8th, 15 minutes is beautiful. So again, the consolidation over here, right? Price came up, pre-market down, up, down, right? 9:30, price pushes up, $5. Oh, it also pulls down too. I didn't even notice. So depending on the time that you got into this trade, you would have been profitable or not profitable. So, you know, if you have a $3 stop, I think you would have been fine, depending on when you got in. So price over here, $10. Price pull back down, and then again, right? It pulled down like that. Wow, 3 something. So if you took it after the close, you would have been fine after this candle. Boom, $5. Even if you took it to the last high, you would have been fine, right? Again, an easy $20 could have been made. Another area over here, right? This looks much better on the 15. It looks more like a consolidation where price again is gathering orders. And again, right? The top of this consolidation is $5, and that's more than enough to make money in this market. Not much after that. Let's see if we have the access to the 5-minute for January. I think we do. Let's see, January 8th. Let's go. Where am I go? Oh, okay. I went too far. Sorry. All right. 6. Okay, perfect. So 5-minute over here. So again, you see the nice consolidation over here, and then the push up. Again, even on the 5-minute, like, this still is a big candle right here, right? $3. Like, I don't think I would have been able to gulp that. But again, on the pullback down, you could have at least gotten these closes, right? Because easy, 250. It didn't come back down. Even after this close up here, this close after here, price would have left you alone. And then over here is beautiful too, right? So once price closed above the last high, it pulled down for a really, really nice bendy, and then a push up. On this push up, again, an easy $15. So now let's move to January 9th. So we'll go back to the hourly, and then January 9th. So now January 9th, tons of consolidation, right? That's all you really see. Like January 9th, it was consolidating. Since it was consolidating literally for 6 hours in the pre-market. So now if we draw a box around there, right, you see it's consolidating. What do? You buy at the support, and that's literally it. This day's range wasn't too large. Like it was only what, $9, $10 after market. It got up to 16, 19. But again, like it wasn't too large. So let's go to the 30-minute and see if there's any other opportunities. So for January 9th, again, right, you see that massive consolidation for the longest time. If you bought at the open, ooh, you probably would have been stopped out. But let's take a look at the smallest time frame and see if it says anything else. So $5, boom, right there, easy, right? 2 to 1 risk reward. Again, you could have taken another buy over here. I probably would have done that after seeing this bearish momentum, but then easily I would have been stopped out, right? Because if I have a stop loss between $2 to $3, then $6 move is definitely going to stop me out. So let's look at the 15 for January 9th, and then we'll see what else there is. So now 15-minute, again, same consolidation, but this looks a lot more prettier, a lot more easier to manage, right? So initially at 9:30, price pulled down like that, right? It kept going, and before it pulled back up. So now, depending on the type of trader you are, you could have either taken it after the closes, so either over here or even over here, and you might have still been fine, right? Depending on how big your stop loss was. Like for example, if you put your stop loss below the wick, $4, then you'd probably have to look for an $8 take profit, which you wouldn't see until later, right? Because price came back down again to close in this wick area. For me though, I think I would have actually taken another buy over here once it got back over here, and again I would have been stopped out, which is the wick that you've seen on the 30. And then after that, I probably would have taken one more trade right over here once I seen this wick down like that, right? Because on the lower time frame, if we go even lower, you'll see that it's creating waves to go higher, right? So you take that after the buy, and then again you'd be solid. That's your $5 move, $10, etc., right? Even if you wanted to wait before you got into the trade, even if you wanted to wait, right? You've seen the close above the last high, price pulled down, right, to its structure over here, and then it pushed up. But like, you got to be wary of the time, right? Like around 2:30, 3 o'clock, 4 o'clock, do you really want to be trading? Probably not, just because again, the volume is not there. So let's go to the 5-minute, and then we'll see what else there is available for January 9th. Okay, see January 9th. January 9th. Alright, so now the 5-minute. Crystal clear. So on the 5-minute, oh, this is the 8th, sorry. So January 9th, no wonder it looks so familiar. So January 9th, again, same consolidation over here in this area. Again for the last 6 hours. On the open though, you see, you still probably would have been stopped out, because what, 9:30 pulled up, came down, and I probably would have taken buys just over here after the close, and then boom. Depending on how big your stop loss is, you could have easily been stopped out. On the other hand, if you waited, right for that wave. Boom, boom, and took buys after, you've been completely fine. So price came back up, and again you could have made at least $5 profit. Over here is a tricky area too, because when you see that price closed above the last high and then it bent, here's a great opportunity for buys. But you definitely, or I definitely would have been stopped out, right? Because I'm seeing, okay, we have consolidation, price closed above, we got the pullback down for the last kiss, and then boom, $2.25. But no, price pulled all the way back down, and I would have been stopped out again. Yeah, this is a tricky spot. Like the higher time frame definitely looks a lot better. After that though, again, like the same rubbish. Like, you know, price comes down, comes back up, starts the wave, boom, boom, boom. We get another close up, we get another high, right, above the last resistance. Price comes back down to the structure point, and then it pushes up. This 5 minute does look kind of choppy. I'm not sure why, but you know, you just gotta be careful when you're playing in the lower time frames. But anyways, guys, thank you for watching. If you have any questions, concerns, want to talk about trading, entries, strategies, let me know. I'll put up some sample examples, and we can go through them and just, you know, how to get through entry and exits. Thanks for watching, and as always, risk on.